Good night and welcome to another Mr. James accounting tutorial. Tonight we will be looking at the board exam topics released by CXC for accounting unit 1. I'll be giving an in-depth explanation from the syllabus on all of the 12 topics that was issued. So let's get right into it. Okay, these are the 12 topics that was issued by CXC, and you notice from here number 1 to 4 would be the module 1, 5, 6 right down to 9 is module 2, and then we have 10, 11 and 12, which is module 3. So what we're going to do is we're going to go through each one of these topics and see how the exam might possibly be coming. The first topic is the nature and scope of financial accounting, and in this we have 4 sections, A to D here. The development of accounting, this would speak about the historical development of the accounting. We should pay particular attention here to the Caribbean area that concerns us, the development accounting, especially in Barbados, Trinidad and Tobago, and Jamaica. The different boards and what exams you write and so on to become a professional accountant. Next, we have the significance and limitations of accounting information. Okay, this speaks for itself, how important it is, and what are the limitations of it, what it does, what the information does not convey. Okay. Third section deals with the users of accounting information and their needs. Make sure you know what their needs are. The internal users and the external users. Okay, they should be armed with about up to 7 users. Just in case you ask for the users, questions have come with up to 5 users. Okay, the accounting cycle, you should know the 9-step accounting cycle and be able to draw it, at least the different steps from the transaction right on to the preparation of financial statements. The next topic is the accounting methods. We have 2 accounting methods that we should be acquainted with: the accrual basis and the cash basis, and you should be able to tell the difference between these. Now the difference centers around the when the recording of the transactions take place. On cash basis, this is when cash passes. On the accrual basis, it is when the transaction takes place. Okay, and we need to have a couple of examples for this so we can illustrate the methods if necessary. Objectives of financial reporting. You have 3 objectives here that you would find you could get from any textbook, because it's included in the conceptual framework of accounting itself. Okay, this is the first level, Everything else stands on that. Okay. Part B, the qualitative characteristics of accounting information: relevance, reliability, consistency, comparability, understandability, substance over form. You should be able to write a few lines on what these things are, and also, again, bear in mind that you could be asked to give an example of each one of these. Okay? In the case of understandability, students tend to think that the statement itself should be understandable by everybody. That is not so. It's only those people who are qualified in POA and financial accounts and so on they are talking about here. It must be understood by persons who have taken reasonable steps. That includes the study of accounting to understand it. The elements of financial statements, and we have all the components here listed. Statement of financial position, statement of comprehensive income, statement of changes in equity, statement of cash flows, notes to the financial statement. Notice that the notes to the financial statement is also a financial statement, okay, just like the others. And the fourth topic is the accounting principles, concepts, and conventions. We have historical cause, prudence, also called conservatism, materiality, going concern, entity, monetary, revenue recognition, and matching principles. Matching principles is also known as accrual concept. Okay, so we can make sure that we can write a few lines on each one of these to earn the marks, as well as be able to give an example. Recording financial information, the fourth topic. Okay, the double entry system of accounting as it relates to liabilities, assets, revenue, expenses, adjustments, capital, and reserves. Okay, now the aspect of the double entry system that you be examined on here is not T accounts, so it's the journal entries. You have to be able to do these items here, journal entries for them, make the calculations and write out the journal entries. Okay, capital and reserves. We have the issue of shares, redemption of shares, capital reserve, revenue reserves. What you need to remember here is to increase capital and reserves, you need to credit the account, and to decrease a capital or a reserve, you have to debit it. Okay, it works just like the sole trader's capital. Alright, same thing with the issue and redemption of long-term liabilities. You're going to get it at par only, so there's not going to be any reserve or premium and discounts, right? And you should be able to make the entry. Again, just a matter of calculating the amount and making the entry. The liability will be credited, whether it's bond or debenture, and the other side of the entry would be cash. Okay, short-term, long-term investments, purchase and sale, including discounts and premium. All right, short-term and long-term investments. This is a separate item from capital, and we always debit it different account. Remember the amount paid to the brokerage fees is not part of the investment, it's part of the cost of the investment, sorry, and should be debited to the investment account as well. There's no expense account for brokerage fees. Okay, so all you have to do is be able to calculate the issue of shares, redemption of shares. Redemption means you're buying it back, and since you are not going to be doing it above or below par, you wouldn't be having to create redemption reserves. Okay, appropriation here of profits for reserves. It's always from a revenue reserve. Revenue reserve means they were created from the retained earnings account. Alright, capital reserves means they were created by trading in shares, capital. Okay, example of a capital reserve would be the share premium account or capital in excess of par. Okay, so make sure you can handle the calculations here and you with your double entry. And remember, you cannot do it in a T account. You have to write up a journal, and at times you may be asked for narrative, and sometimes they may not ask you for narratives. Alright, but if they don't ask you for narratives, if there's no explanation, then you have to include it. Okay, so let's see what the next topic is, and incidentally, that's the next module we come. Our next topic is accounting and administrative controls systems, and this is from module 2. This is the internal control system. We should have a definition for this, and make sure we memorize it properly, and we should also have the nature and types of internal control. We should be able to tell what it is, and we need to know the character of these 4 items here, the internal controls that are used for them: inventory, cash, accounts receivables, accounts payable. The inventory is related to the accounts payable, and the cash to the accounts receivable. So you can get in the study guide or any textbook for that matter will give you a good idea of the internal controls for these, as well as a good definition for this one here. The role of the auditor. We have internal auditors and external auditors. Each one of them have different roles, and you have to look at it. The role of the external auditor is to express an opinion on the financial statements, and the internal auditor is the one who does the checking on the internal systems, internal control systems, and the accounting system as well. Okay, so make sure you are armed with some good examples for these here, and you can find them in your textbook. Any textbook should have a section on internal controls. Okay, let's take a look at the next topic. Our next topic is the forms of business organizations, and we have 5 different forms here. For sole traders, partnerships, corporations, cooperative, non-profit making organization, including non-governmental organization. We need to know the character of each type of this organization that we have here. And for instance, one person, two or more owners, again, and cooperatives, a number of owners coming together, right? Non-profit making organizations, well, doesn't really have an owner, okay? And we need to be able to compare these with one another here, okay? And tell what are the advantages and disadvantages of each one of these, and also what advantage a sole trader may have over a partnership and a partnership over proprietorship. What are the advantages of corporations over partnerships and stuff like that. We should also be able to analyze them in a table under different headings like ownership, length of life, and stuff like that, okay? So when you're doing this topic, you should organize your information under the different headings that you find in the textbook. Alright, so this is the first topic in module 2. Let's take a look at what comes next. The preparation of financial statements from incomplete records. Now this is a topic you would not have done at CSEC level because they have removed it from that syllabus and brought it in here. But still, you should have done it at 6.1. Okay, it includes control account, statement of affairs, receipts and payments, and correction of errors. So all these you need to be able to do in order to prepare things from financial statements from incomplete records. For the control accounts, you need to determine the purchases and the sales from the control account. The statement of affairs, you need to determine the capital from in there. Receipts and payments, you can get your expenses and revenues from in there, and any error, correction of errors that they may give you to do will also provide some of the figures for your financial statements. Okay, so you're not going to get the figures in the trial balance form and asked to write up financial statements. You are to deduce the figures from these items. Okay, so look out for questions like that. We haven't seen one of these in a number of years in sixth form. So what I will try to do, I'm not making a promise here, is put one video up on the preparation of from incomplete records. Okay, so look out for it. The next topic, we move on. Income and expenditure accounts is the next topic, and we have to be able to do them for non-profit making organization and non-governmental organization. Now this is another area that was removed from the CSEC syllabus, although I still did it with my students because I expected it to come up into the 6.1 or the Form 6 CAPE exams. And here you can go to one of my videos and you can see how to do the income and expenditure accounts. The focus here will be on the um, bar trading account and also the subscriptions account, how well you can handle them. So you can check any textbook and see how to handle them, and then look at the video on income and expenditure accounts that we have. It's in the CXC section of the videos. But for non-profit making organizations and non-governmental organizations, and indeed for the cooperative societies and so on, the income and expenditure account are still the same. Okay, the non-governmental organization, you may find those are the ones that may receive a grant from the government. Okay, so let's move on to the next topic. Our next topic is balance sheet preparation, and you have to be able to produce the balance sheet according to international accounting standards. Okay, reported for small and medium-sized business. These are the types of business that we find in the Caribbean, small and medium-sized. We do not have to have very large businesses. Even the multinational corporations that we have down here are small and medium-sized. Okay, now the IAS that governs the balance sheet and the items on the balance sheet are these four here. And if you're doing it according to the SMEs, which is the same, but you only have one small, small and medium size IFRS. Okay, now these would have the same information that these are, right? Or this would have the same information as these. Okay, now these are the sections. If you have never read this before, you can go to the Google and type in this here at .pdf, and you should be able to get a PDF file with these. You look up these sections in it, and you see what is meant by SMEs. Okay, in relation to your balance sheet, inventories, property, plant and equipment, and liabilities and equity. Okay, we look again at publish financial statements. It's the same procedure as for the balance sheet. You look at the IFRS for SMEs, and you can Google it and get these sections again. Alright, notice some of the same sections show up as before. Alright, and or you can Google these here, IS1, all of them is the same. They deal with the preparation of financial statement for publication. Okay. The second part here, the legal requirements, deals with the Local Companies Act and what transpires in the different countries of the Caribbean area. Okay, so we should be acquainted with it. Usually these IAS here is what the Local Companies Act are made up of anyway. Okay, but your Companies Act may not be as up to date as the IAS and the IFRS ME. So you read these sections again and you will know how to prepare the financial statements. In addition, there are a couple of videos on my channel which deals with preparation of these things, and you will see the different formats for the preparation of the financial statements from there. Okay, so let's move on to the next. So our next topic is ratio analysis, and we should be able to calculate ratios in these four areas: liquidity, solvency, activity, and profitability. So you should be armed with a few ratios here, at least the first two, the quick ratio and the current ratio. And so for solvency, you're looking at the gearing ratios here, activity, those relating to the sales and volume, asset, sales to asset and sales to expenses ratios, and then you have the profitability as well, markup margin and net profit percentage. So you should be able to calculate these and also explain what they mean. Okay, your explanation must be brief and to the point. Uh, you can't say things that the ratio doesn't show or that you are not given information about. Okay, you have included the next part here on the same slide because these two topics are related. So the analysis is simple. Is the analysis here is of the ratios that we calculated here, right? You should be able to tell what they are, and you try not to see more than the ratio says, right? Limitations of the ratio analysis. This is similar to topic 2 that we just did, the limitations of the financial statements, and we have the two type of analysis that you could do: vertical and horizontal analysis. Horizontal is when you want to compare one year with another year or one company with another company, and vertical analysis is when you are comparing the figures and in the same year. Okay, you have common size. This is where the percentage is included at the side of the figures, and from there you make your analysis. Okay, there's a video on the channel dealing with common size statements if you don't know what that is, and you can take a look at that there. And all in all, this topic is a regular topic, and it didn't show last year, so you should expect that you're going to get one this year, dealing with a large part of the module 3 questions. Okay, so that brings us to the end of the topics. This video will be almost half an hour long. I think you should set aside 50 minutes or so, stop and take a look back at anything you don't